Hola guys, and ¿qué pasó? What's going on? This is Hala Pablo, and I want to do a little video on macro and micro trading structures that we see currently in Bitcoin. This should be a real brief video. I just want to look at the get different perspectives from the smaller, say like 30-minute to 1 hour perspective, and then zoom out to the greater, get the greater picture, the bigger picture to the 4 hour daily, things like that, and just give us a really good perspective of where we are and what we can expect in the short term to the mid future with Bitcoin, and how far we can go down and how far we can go up also. So I know I've been putting a lot of videos out on Bitcoin, and the vast majority of them, in fact all of them, have been bearish, and it seems like I'm a perma bear. I'm not. I'm actually not a perma bear at all. I am essentially I'm a bull investor, but I believe that you got to go with the market, and if the market's bearish, you got to be a bear, and if the market's bullish, well, you turn back into a bull. So I'm one of those. So right now I am decidedly bearish on Bitcoin, along with just about everything else in the crypto sphere at the moment. And I'm going to tell you why. I'm going to show you why in this. So here we have the current range. I've got this on the 1 hour. The current range, here's where we are in Bitcoin right now. You know that just recently, in fact yesterday, we had this bull trap here that was of course overbought Bitcoin. Anyone who had done any kind of homework in Bitcoin could see right away that it was overbought, yet you'd be so surprised how many quote-unquote reputable traders were enticing people to jump into this moon rally that they're saying that we're going, Bitcoin was never going to see 18,000 again. And had they just looked, had they just taken time to look on the macro versus the micro format, they would have seen that we were severely overbought at that point yesterday. And so this retracement that we saw coming down from 18,000 hit that supply block, came back down, was no surprise at all. Shouldn't have been to any serious investor who understands volume price action. So yeah, we came back down into this rising wedge. Now we've been in this rising wedge. I have these rising wedges outlined here with these yellow trend lines, and there's a series of them, and they've gone all the way back to, I mean, this one started, I guess, after this bear symmetrical. We marked down to the 15.5. This is the lowest that we've seen so far this cycle, and that was back on the 22nd of November. And then here was another rising wedge structure that really started, I would call it around September, around the 21st of September. And there's yet another one here. These are macro wedges, and this one started back in June. This summer, last summer, or this summer, I guess, it's still 2022. So we've had a series of rising wedges, distributing, capitulating, and it's important to see that all of these wedges that we are in are trending or taking place within a gigantic falling wedge. Now, what does that mean? Now, rising wedges are bearish continuation patterns. We see that on the micro. We can consider the inside of this falling wedge here. Let me take it out to the 4 hour. So we'll get some elevation here so we can look at the topography a little bit better. See, this is where we are right now in the grand scheme of things. It's like we're looking down at the planet Earth from deep space now, so we see more of the outline of the planet, of where we are. And this is the macro structure that we're in, and we can see that it is a huge descending wedge, okay, a falling wedge. Falling wedges are, yes, you got it, they're bullish. They are bullish. So that's the good news, guys. When we reach the end of this wedge, or whenever, well, we're going to have to see some signs to where we're breaking. When we break out of this falling wedge pattern that we're in currently, through made up of these series of rising wedges, we are going up, and going up cataclysmically, I might say. How far up? Well, in the short term, I mean, if we go off the of where we are right now, say the low of 15.5, this is if we don't go any lower. So this is right where we are right now. We are, the 1.618 extension would take us all the way up to $31,000. That would be here. So this was when the, this is when the macro reversals come, we can anticipate a markup reaching this height in the, pretty quickly. And that makes sense because this 31,000, 31.2 mitigates this macro liquidity void. So let's just say we do a little more trending down here, and then the reversals come next year at some point, and we make it all the way back up here. This area, this 1.618, falls right in line with the top of this redistribution pattern right here that would form this gigantic liquidity void. So depending on how far out this goes. So the 1.618, we're looking at 30,000, just round it down to $30,000. So that's the good news. Eventually we're going to go up, but not yet. Not yet. And I don't want to, blow smoke up anyone's what right now, because I think that there is still more downside to come. Let's go back down to the hourly and look at some of these, kind of do some surface analysis, some forensic analysis, I like to call it. I like to use the 1 hour and lower, say like the 45-minute candlesticks, and the all the way to the 30, and sometimes the 15-minute as like deep forensic candles. So if you really want to get in-depth analysis to like the patterns, and I'm talking about looking at individual candles, finding shooting stars, hanging men, dragonfly dojis, things like that, gravestone dojis, dark cloud covers and things like that. You get on the lower time frames, you get on the 30-minute to the 15-minute. I like to use those, especially when I'm inspecting them inside of these micro trading patterns, like these series of rising wedges. So that brings us back to where we currently are right now. This is what happened yesterday. We hit what I call the horns of the devil. We saw the horns of the devil. And if I bring it down to the 30, you should be able to see the horns, what I'm talking about. You see these horns typically, some people call them dead cat bounces. I just call them horns of the devil, los cuernos del diablo. And they signify the overbought position on a micro trend or a macro trend resistance being rejected, whole scale rejection. With the second horn shoots straight up, because that's the scam. That's the scam pump. That's the liquidity grab. That's like, all right, we had that initial pump, we went back down, we retested, and we bounced. And because we bounced, people are thinking, oh my God, man, we're mooning, and we just broke resistance, and we're fucking going. And but what it is, it's a FOMO, it's a UTAD, and so I call it the devil's horn, and it sticks up. So that's what happened. That's what this red is, and we saw that we retraced all the way back down within the rising wedge, signifying that, hey guys, we're not done yet. We're not out of the haunted forest. We're still in a bear market officially. So where does that leave us right now? So we're back down here now, bouncing off microtrend support. We could come back, rebounce back into this wave. At some point, if we don't prevail through this macro trend resistance, this line, remember, this is the outside of that falling wedge that that we need to break conclusively and continue the mark up from, to have officially overcome or prevailed from this rising wedge. If that doesn't happen, then we're still within the confines and the governorship of these rising wedges, and the rising wedges are bearish. So at some point, I think we're going to go back down. I think that this is another distribution, a redistribution. Sorry to be the bearer of bad news, but you know, I go by the TA, and I have to tell you what I see, and I could be wrong, but I don't think I'm wrong. I hate to say this, but I'm rarely wrong with my technical analysis. So I think that what's reasonable is we can see this maybe come up to the channel midpoint, and then we'll inspect the volume spread reads down here. If we start getting underneath TRM, which is a 0.5 Fibonacci within this rising range, if we start seeing demand surplus, or rather, yeah, if we see demand surplus, then we're probably going to rise above the 0.5 Fibonacci, and then that'll be different. But usually what we've seen underneath the 0.5 is we're seeing supply dominance. That's what all these spikes are. These spikes are either supply dominance beneath TRM, which is trading range midpoint, or it's when the price action hits the upper micro resistance and we get devil's horns. See, here's another horn of the devil right here. Horn of the devil. It always comes above the micro trend resistance, and it kicks it back down. And that's when we see supply spikes. That's when we see these big ass supply spikes, like this one here, this big ass horn, and then we have this massive Herculean supply spike where the market makers, smart money, sold into the pump that all these retail newbies, these weak-handed bull traders, that many of them unfortunately influenced by people who don't know how to trade, who have channels on YouTube and Telegram and all that. And the worst part is they're fucking paying for these signals too. And so they were enticed to buy this. They were skinned alive during the fall. And but anyway, that's what these, if we see supply dominance underneath, now let's go back to what I was saying. I didn't mean to get sidetracked. Underneath this midpoint in this wedge, there's a midpoint, and that's the 0.5 Fibonacci in this wedge. If we're beneath it and we begin to see supply dominance, then that is a harbinger that presupposes that we're getting ready to transgress micro trend support and go down for another spell and have whole scale distribution like we see here. These whole scale distributions within the falling wedge are when the price goes intergalactic and creates a whole new trading range, like this range right here. The first half of the range was a bear symmetrical, and then the second half formed this rising wedge again, which is bearish continuation. And we've seen that over and over again on the 3 consecutive ranges within this falling wedge. So when can we hope to see the reversal? Well, we have liquidity voids that need to be mitigated, and once those mitigations happen, then we look at the volume, and if the volume confirms the mitigation, that it wasn't just a fake out or a scam pump or something like that, then we know that we're closer and closer to possibly have broken through and can begin the reversal, the main reversals. And let me tell you something, the reversals, once the market starts reversing, boy, get ready, because the deeper you fall, the higher you pump, and then vice versa. The higher you pump, the deeper you fall. We've fallen pretty drastically. This has been one hell of a bear winter. I don't think anyone can argue that. We've seen so many capitulations, and it's just been nuts. So when we finally do see the macro reversals, it's going to come with a vengeance, and we are going to shoot up, and it's going to fucking melt faces. Okay, guys. Just the Fibonacci's alone off this range that we're in right now speaks of $30,000 Bitcoin, and that'll happen fast. That'll happen fast, and that's what I believe. And so if you learn how to trade these bear cycles, learn how to read volume price. If you notice, I don't use indicators. You don't need indicators if you know how to read volume price action. Everything is here. Everything is in the price action on the screen with the patterns. You just have to know the pattern recognition, and in conjunction with the volume, and you can track the forensic footprints of these composite operators and these guys who they're like kind of like the wind on the ocean. They engineer the waves and all that. And the waves, of course, all of this is just a visual representation of human greed, and fear. So that's all it is, and that's why the Wyckoff schematics are so accurate even to this day. since they've been around in the late 20s, early 30s. They still ring true today. And so with this channel, I hope to teach you guys that, and I hope people profit from this and from my analysis and my opinions on where we are. So I know this this screen got really messed up and really marked up. So let's make it simple here. You see all these, trading is all about liquidity void mitigation. You see all these mitigations here. This is a void mitigation. This is a mitigation. This is a mitigation. This is a mitigation. This is a mitigation. And if you notice, the mitigation is all happening here along the microtrend support. So, and then the same thing on the resistance. Mitigation, 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 mitigation. So this is either going to rise from here and get mitigated on the macro, and we would break this trend and then mark up from here, or we're going back down and we're going to do more mitigations along the macro trend resistance, because here already, this area here, if you remember, that's the side of the falling wedge side. So we're either going to mitigate this way or mitigate this way. If we mitigate along the falling wedge, then that's a good sign. If we mitigate on the micro trend rising wedges, then that's bad as far as like if you're a bull trader, because that just presupposes more downward action. So anyway, that's enough. Let me let you go with this, and hopefully you got something out of this video. If you appreciate this sort of stuff, technical analysis, if you're a serious trader, hopefully you do get something out of this. I'd love to hear from you. Give me a like or a subscribe, or tell me that I'm full of shit and I don't know how to trade. I don't care. I hope this doesn't fall on deaf ears, and those who need to hear it will hear it and profit from it. All right, guys, I got to go. I'll talk to you all later. Y'all be good, be safe, and just do the right thing, all right? And listen to this kind of information, and do your own research, and improve your trading. You'll be good. All right, guys. Talk to you later. Bye-bye.